Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at Bitcoin. We've seen some volatile price action recently and we're going to be going straight into our Elliott wave count and finishing up with our basic technical analysis. We're going to be following on from last week's video, where we looked at the two options I presented. One I've been following for a long time, which is the flat pattern we've been following for several weeks, and the other one was the idea of an ending diagonal into a zigzag correction. So let's see where they've ended up and where we think they're going. So we're going to start here with the flat pattern on the day time frame in arithmetic scale, and putting it really simply, we've done enough to consider this complete. Let's just come down to 4 hours so we can see a bit more clearly what's been going on. So we've said topped in a primary wave 3 here on the 14th of March, and then I was saying how we had a 3-wave structure here into our A, 3-wave structure here into our B, and now we've gone 1, 2, 3, 4 in a triangle, and then 5 down to here with another triangle at minute wave degree. And our target for all of this move was the 161.8% extension of A from the B. So the 161.8% extension of this move projected from here for this move. And we basically got the target. We got within a few ticks of it. It wasn't precise. We didn't get that perfect algo tick onto the 1618, but this could just simply be another algo front running the one aiming for the 1618. And it just got turned around a little earlier. If we look at the other Fibonacci relationships relative to the length of the A, the B brings us precisely to the 123.6 for the B, which is a perfect B wave expansion of the A. So 3 waves into an A, 3 waves expanding into a 123.6, which we get, or a 1618. It could be either. We got the 123.6, and then 5 waves down is the 1618 extension of the A from the B. So I like this. It looks good, and we've had a very strong bounce. So this pattern is complete, and you could argue now for higher highs. So that's the flat pattern for the moment, while the low at 46984 spot 96, while this recent low holds, I'm favouring this pattern. If this low breaks, I'll shift to favour the other one. So on that note, let's come over and have a look. This is the ending diagonal, which instead of putting the 3 over here in our flat pattern, which has given us so far, if we were following the previous pattern, has given us a correction of 43 days, substantial enough to call primary degree. In this count, this wave 3 is only just completed on the 14th of April, which gives us only 11 days of correction. So I don't believe that's long enough, and I believe that this is a 5-wave move, and I've counted it as a 5-wave move. So on that premise, we're not free. So we're not 3-3-5 flat, we're looking at a zigzag because we've got 5 waves. So in that case, the B cannot come back beyond where the A began, which is up here at 64920 spot 27. So let's just put a little call out up here. So B wave invalidation, or no, I won't say B wave, because it could be a B of a flat. I will say zigzag invalidation. Okay, there we go. So if this is a zigzag, we will come back through this level at 46984 spot 96, and we'll head lower. And my target for this correction would be, more time consuming than we've seen so far, probably 20-30 odd days, maybe longer, down to the 38.2% retracement of the entire primary wave 3, giving us 37532 spot 76. And the way we would see this would be 5 waves down, 3 waves up into a B, and then 5 waves down into a C. Wouldn't look like that, but you get my point. It would probably look a little bit more, ooh, moving the whole thing, probably look a little bit more like this. Okay, so you have 5 waves in an A, 3 waves in a B, 5 waves in a C, bringing us to target. That we would also be looking for 1-to-1 parity. So the length of the A being equal to the C. We can guesstimate where our B may complete by aiming for that parity if we're choosing this as our target, but this is all theoretical. There's absolutely no way of guaranteeing that this is how it would play out. But if we did hit the 38.2 as a target, then all we do is we move the 100 until it's over the 38.2. That gives us 55.4 66 spot 21, which is not too far from where we are now, and we would turn around and come back down to find that. So you could do something like you come to roughly here, you come back, you come to here in a B wave, and then you come down to parity in the C here. So in this count, we're just looking for a free wave move on the daily time frame, because we've got 5 moves here on the daily time frame. We're looking for free wave move on the daily time frame into a B, and then 5 waves down into a C. Deeper correction, better buying opportunity in my opinion. My greediness favours this count. My Elliott wave head favours the flat count for the moment. Okay, like I said, for as long as the recent low of 46984 spot 96, for as long as this low holds and we continue to impulse off of the low, then I'm favouring the completion being complete and us heading higher. If I see that break, then I'll be favouring the ending diag into a zigzag going deeper. And that's the way I see the Elliott wave count for the moment. So for those of you who are interested in getting into a position, then now that we've seen a bounce and we've seen an impulsive move off of the low, all you're really looking for now is a 5-wave move up that you can determine on a time frame that you're comfortable trading, and then a 3-wave move back. Oh, bear with me, for some reason my chart froze then. There we go, it's working now. That's a bit weird. Could be an internet issue or whatever. Anyway, so like as I was saying, you'd be looking for, all you're looking for now, whenever this rally here off of a low, wherever this stalls, you're just looking for 3 waves back, which doesn't transgress this low. If you get 3 waves back, 5, 3, 5, or you get 3, 3, 5, whatever you get a 3-wave corrective structure. It could be sideways, it could be, it won't be a triangle, it could be a zigzag, it could be a flat. You're looking for 3 waves, you want to buy, and then get in once you've seen 3 waves back. You want to see some kind of reaction, and then you've had your 3 waves back, and then you're off again. In that case, your low, the low that we've already discussed at 46984 would be your invalidation point. Okay, so we're just looking for 5 up, 3 back as usual. Okay, so that's the way I interpret the Elliott wave count. I'm going to be leaning into the flat pattern having completed 335, 40 odd day correction with a 30% drop from the highest point. You know, or 27, 28, something like that. Let's have a look. 27.8%. So a significant sell-off. 335 complete. So just watch that level. 46984. Keep an eye on the current price action. Is it impulsive? And then look for some corrective move. And then if we do break that level, then we turn over into this one and say it's a zigzag and we're going much lower. So that's it. That's Elliott wave complete. So let's now come out to the weekly time frame and see if we can find any clues to support what we've just been talking about with our basic technical analysis, and also take a more broad picture of the market from that point of view. So we're going to hide all our Elliott wave count now, and we're going to bring up our exponential moving averages, which is a 10 in yellow, a 20 in blue, a 60 in orange, and the 250 in green. We also have a volume profile on the right hand side showing the various peaks and troughs of the buy sell volume, with the point of control being our yellow dashed line here, which represents the extreme of that buy sell volume. We're also going to be using an RSI set to a 10 close, with the green 30 level representing oversold and the red 70 level representing overbought. Also got a MACD with a 10 for the short term moving average, 20 for the long. The short is in blue and the long is in orange. So what can we see here on the weekly time frame? A move below the 10 weekly moving average last week, and a move back above it so far this week. No sign yet of a vicious breakdown in the making. We do have that 5-wave move here, which could be part of a deeper zigzag we've discussed with our ending diagonal into a zigzag. It is still a viable option, but we've also seen the completion of a flat pattern here as well. Now we have seen, we're still well above the 20, 60 and 250 exponential moving averages, by the way. They're a long way off, so we're still well up in the clouds. Our RSI has shown a significant bearish divergence, which was from the 4th of Jan through to the 15th of Feb, through to the 5th of April, those of the week and corresponding weeks. So we've seen a series of high, higher high, higher high in price, high, lower high, lower high in RSI, in momentum, and therefore we've had this breakdown. Now, If we want this flat pattern to be complete and for the price to go higher, then we need to see the previous high. Excuse the count coming up for a moment. We need to see the previous high at, let's get a magnet on it just to remind ourselves. We need to see the previous high at 64895 spot 22 get taken out. And what would be lovely would be to see that high get taken out, momentum to continue impulsing higher, and then to see the RSI break this bearish divergence. So we'd want to see ourselves come back up into overbought territory, take out this high at 88.79. That would make me much more comfortable we were impulsing up in a fifth and final wave higher. Right? Now, it doesn't have to happen. A fifth wave can come up higher and continue higher than the third wave and still have bearish divergence. That would support the idea that the count so far is correct, that we have done a 3, 4 and we are now in a fifth of a 1. So the fifth wave momentum is dying off throughout the whole process as we top out, but that could be a fair distance away if that flat pattern is complete and we're heading higher. However, now if we look at the MACD, we have had our first significant event on the MACD in terms of serious selling volume for a long time. We haven't really seen a build up of these kind of size bars. Obviously it's relative to the previous move, so it looks a little extreme, but the last time we saw such an extreme move was all the way back in 2017 when we had a crossover of the short and long term moving averages on the weekly time frame, followed by the red bars here. So that's a bit of that could be considered a little problematic, a little concerning. However, we have to remember that we have crossed over before, like we did back here on the week of the 5th of August 2019. We had a bearish crossover which went into this deep correction into the March low of 2020 before then coming bullish again. So we swing up and down, and we don't necessarily have to transgress previous lows or previous highs when doing so. It's simply a shift in momentum on a temporary time frame. So, but once again, if we saw this turn bullish again, and for the blue line to come back over the orange line and to get a green bar on the histogram in the next couple of weeks with a sustained move above the previous high at 65,000 with an impulse wave coming up, then that would be very reassuring that we're into that fifth and final primary degree wave up. Okay, so long term weekly time frame heading towards that cyclical wave 1 top as I've got in this super cycle wave degree move up. We are getting closer to the end of it. It could be weeks away, it could be months away, but it's coming, and when it comes, that's the real correction. We're back into 2017, 2018 mindset at that point. Big time styly, big move lower, big opportunity though. That will be the big one. I don't think this is the big one yet. Like I said, for as long as the previous low holds, I'm leaning to this flat pattern being finished. So let's come down to the daily time frame. Right, at the moment on the daily time frame, we are testing, having broken through the 10, 20 and 60 exponential moving averages and reaching oversold conditions on the RSI. Big build up of bearish momentum on the MACD. We are testing essential moving averages here. We're testing the 10 and the 60 at the moment. You can see the yellow line and the orange line with the blue line above us. So if we get, you have to excuse the image of the count coming back up again for the moment. I just want to use my little point. If we come up here, testing resistance at these moving averages, 5-wave move, and then some kind of 3-wave move back, right, at that point, we come back above these moving averages, the 10, the 60, the 20, in another impulse wave up, and then another move back, then and then we take out the high at that point, and all this is turning bullish, all the moving averages are turning around. That would have me very, very confident that everything did complete down here, as I suspect. Same with a return to bullish conditions on the MACD. Nice green bars and the histogram crossover of the blue over the orange moving averages would be nice. Having visited oversold conditions, I also find that reassuring as well, that we've had a solid bounce from oversold conditions. But from a fundamental or basic technical analysis point, we do want to see us get back above these major moving averages without transgressing the low at 46984. We want to get through these, pull back, carry on through them. At that point, we can continue to become more and more biased in our bullish interpretation of events. Alright, so I think that's enough, guys. I'm going to call it there. Now, before I go, if you're new to the channel, please subscribe, smash the like, leave us a comment in the comment section below if you want to. Hit the little bell notification icon to remain informed of future video releases. And a big thank you to my patrons. It's been my first month on Patreon since I think it was April 4th. It's been a great launch. Things have gone very well. Appreciate your support greatly. A quick word out to any of you who are interested in joining the Patreon. There'll be a link in the description box below. Go and have a read of what's available of the tiers. But I will say, because I charge on the moment you join and on the 1st of each month, you probably want to leave it until the 1st of May, okay, or at least the first few days of May, so you don't get charged twice in succession. Now, just a quick explanation of why I'm doing that. I've had a few people say, oh, I don't like the idea of being charged in succession 2 times, and that's why I'm telling you to wait until the start of the month. The thing is, though, if you don't do it like that and you're a monthly creator like I am, where you're not charging people per created content, you're charging them and giving them full access to everything you've produced in the past, somebody could quite easily pledge the amount for a tier they wish to occupy, or that they wish to access, get access to all of it, and then back out of the pledge at the last minute before the charge comes in at the start of the month. And I'm not allowing that. If you want it, you come and pay for it, but I'm just warning you, try and only pay for it the once. Alright then, guys, we'll leave it there, and thank you very much for joining me on this technical analysis of Bitcoin, and I'll be back sometime during the week with you soon. Alright, bye bye.